All right, what's up, everyone? Today we're going to go over one of my new chart layouts that I've got with a nice little script here. Okay, this is the advanced decline ratio. Now, the way that I like to use this specifically is I like to see when the market is, potentially a little bit overheating, right? And it's mostly a short-term signal, not much of a long-term signal, but it lets you know some really important things. Now, this measures market breadth, and so this market breadth chart features the S&P 500 index above, right, on our SPX, and the advanced decline ratio below. The advanced decline ratio measures the number of advancing stocks divided by the number of declining stocks on the New York Stock Exchange. Highlighted in gray boxes are instances when the ratio reaches 3 or more. Okay, now, these periods often precede sideways movement or a drop in the market. Traders can use this indicator to anticipate potential market consolidations or downturns, making more informed decisions based on the behavior of the broader market. So the whole reason we're even doing this is to try to gain an edge, right? There's many ways to gain an edge in the market, and using market breadth is one of those, which is why I have a whole package of market breadth chart layouts that you guys can purchase using the link in the description down below to get full access to the dozens of market breadth charts that I have. Now let's go back here and let's actually look at this signal. So this vertical or this horizontal line right here is 3. So when we're above 3, this is where we get those potential signals at, okay? And I've highlighted them in gray. We have here, we see we come above 3, and what do? We pretty much just move sideways for a couple trading days here, right? These aren't big, massive, long-term sell signals, but these are letting me know, hey, in the short term, maybe things are a little bit too hot, maybe a little too frothy, and maybe we could potentially see some sideways consolidation or a downturn in the market. And we see the same thing over here. We have our gray periods here marked, and we move sideways, right? Over here again, we move sideways. But look at what it did. It actually spotted the top. All right, we have a top here, then we come down and make a lower high. And at this lower high, we're seeing again, we're above that 3-to-1 ratio. So we know that, hey, maybe this isn't the time that we want to buy right now. Maybe things are a little bit too frothy. Let's be patient, right? Let's be patient here. Let's not buy this exact top right here. Let's be patient. We see we consolidate sideways and then we break out past those highs. Here, we never break out past those highs. We make lower highs. And here, we just peak right there and then continue a downtrend. Over here, we start to see us coming back above, right? And we're back above 3 right in this period here. We move sideways and we actually come back and retest that zone where we came and hit that over 3-to-1 ratio on the advanced decline. Same thing over here, same thing over here. And you can see that these periods oftentimes lead to some sideways movement or pullbacks, right? Sideways movement right here led to a pullback here, led to 1 day of sideways movement. But if you look about a week or two later, you see we ended up pulling back and going back lower again. Same thing over here, sideways movement for about a day or two, sideways movement for a day or two. Here, we actually continue the uptrend very nicely after getting that signal. Here, we see a pullback. Here, we see a top and then a pullback. And remember, these are all shorter term signals. So if you're ever someone who's maybe not participating in the market, or you're looking to buy S&P 500 call options on the SPX or the SPY, you can use this ratio here to say, hey, maybe, if I'm looking to swing trade calls for the next, within the next week, right? And I think that the S&P 500 is going to be up within the next week. And so I want to buy short dated call options. Theta, which is time decay on your call options, really starts to eat away at your call options if the price of the S&P 500 is not continuously going higher. And so this can potentially save you from getting in. And let's say, you see this signal on a Friday after close and you want to come in and buy on Monday. Maybe this will save you from, buying those call options Friday or buying them Monday, and rather waiting to see, do we move sideways? Do we pull back? And then you can potentially look to buy a breakout once the S&P 500 gets back above those levels, right? That's just one example of a way to use it. It's not something to live or die by. No strategy or measurement of market breadth or any type of instrument is going to be 100% accurate 100% of the time. But we do see that historically, this has been a good indicator for a, short-term consolidation slash short-term pullback in the very near future. Okay. So hopefully you guys enjoyed today's video. If you did, remember that you can purchase all of the chart layout packages using the link in the description down below. And they will come with images and a brief description of them, and also videos just like this for each single one. That way you guys know what they are, how to use them, and how specifically I like to use them myself.